Okay, everyone, today we're going to get started on Chapter 16, the cash flow statement. I've always found that the cash flow statement was the hardest statement to wrap your head around. Okay, so we're going to take our time. We're probably going to take 2 weeks to finish Chapter 16. Okay, so not a big deal. We got lots of time. But again, in my opinion, it's the statement. It's not hard, but for whatever reason, I've found it difficult at first, and students find it difficult at first. So we're gonna slow it down and do this the best we can. Now, ideally, we would have done this in class, but so be it. So today we're gonna go cover slides 1 to 15, and in your textbook, that's page 1027 to 1033. Okay. So let's get started with Chapter 16, reporting and analyzing cash flows. So ultimately what we're trying to do is we're trying to create a statement called the Statement of Cash Flows that is going to, it's one of the 4 financial statements, okay? So we have our balance sheet, our income statement, our statement of retained earnings, and then lastly, we have the cash flow statement. So cash flow tells us why we had a change in a cash balance from say 2020 to 2019. Again, where did that cash go? It has nothing to do with the income that you made. It's simply tracking cash, and what that cash was, the cash, it tracks the outflows of cash and the inflows of cash, okay? So we're gonna explain the purpose and importance of cash flow information. We're gonna distinguish among operating, investing, and finance activities. We're going to identify and disclose non-cash investing and finance activities. So that'll cover up till today. And then tomorrow and the rest of the chapter, we're going to describe and prepare the statement of cash flows. Okay, so that's ultimately what we're leading up to. We'll calculate cash flows from an operating, for operating activities using the indirect format. And then we're going to look at the investing and financing activities, where the cash has gone in that direction. Now, you'll see in the textbook that they also cover the direct method. We are only going to cover the indirect method of cash flow statements. Why? It's because that's the statement that's used most heavily in practice. Okay, in the textbook it says the direct method is preferred, though it's not. Okay, it's the indirect method that you often see in financial statements, both for publicly traded companies and for nonprofit organizations or private companies. Okay, so if you're ever doing questions on your own and it says create the cash flow statement in a direct format, again, we don't do that. We do the indirect format. So what is the statement of cash flows? Well, it's a report that details information about the major cash receipts, which are your inflows, and cash payments, which are your outflows during a period. So you could have cash payments for a variety of things, for expenses, for AP, for equipment purchases, for repurchase of shares. So it really just depends on where that cash has gone. So cash flows are classified as operating, investing, or finance activities. Okay, so we're gonna review each one to determine where a transaction falls on that statement. So again, it helps users to evaluate liquidity and solvency of an enterprise and its ability to generate cash from internal sources. So I said before, it kind of tells you where the actual cash went. Okay. So how does this help the user answer these questions, again, that we just talked about? Well, it can let the reader know where the company gets its cash from. Okay, is it regular sales? So we could see that by a decrease in our accounts receivable. Are they selling shares of their company? Are they taking on new debt? Okay, so it really all depends on where that cash is coming from. Again, it can come from a variety of sources. Where does the company spend its cash? Okay, is it spent on regular operations? Is it spent on investments, finance? So it really just depends. And what is the change in that cash balance? Again, you can always tell the change in the cash balance if you go to your balance sheet. Right, let's just say this is our balance sheet. We have cash 2020. The cash balance is 200,000. And in 2019, the cash balance is $240,000. So that's a decrease of $40,000. Okay. So what the cash flow statement is going to do is it's going to tell us why our cash balance went from 240 down to 200. Okay, within that year. Okay. Now, when we look at the difference between the beginning and ending balances of cash and cash equivalents, this is what we're doing, okay? So again, it's that detail. It's detailing what happened. Okay, again, why did it go down $40,000? What happened to that cash balance? So it's also an analytical tool used to assess and evaluate and analyze performance for decision making. Okay. Now, again, I always found it the most difficult statement to create, and a lot of times the users, the company owners will get these. I don't even know if they know what they're reading when they look at the cash flow statement. Okay. I mean, a lot of people still get the cash flow statement confused from a income statement. Okay, it's not an income statement. Okay, and also the cash flow statement is not a cash flow projection. Okay, so you'll see a lot of times it's people use the wrong terminology because they just don't know. So again, when we look at our balance sheet, this cash balance here, okay, it consists of two things. Actual dollars, okay? Whatever's in your bank account. But also it includes cash equivalents. So these are investments that, or they must be readily convertible to a known amount of cash, okay? And they have a maturity date of actually the maturity date is less than 3 months from the date of acquisition, okay? So they could be short-term T-bills, or I don't even think there's such a thing as a short-term bond, but it'll just say what the example of a cash equivalent would be. Okay, but again, it's very temporary. So let's look at our three types of cash flows. Okay, so when we make our cash flow statement, okay, now if you want to take a look at an example of what a cash flow statement looks like, you can go to page 1034. Okay, so that's an example of a direct or indirect cash flow statement. Again, it's the one that we're going to be creating. So again, you can tell, right, you'll have your operating activities. Okay, you'll have your investing activities, and you'll have your finance activities. Okay. So the first thing that we got to do is we have to look at, well, what is an operating activity? Well, the operating activity is the principal revenue producing activities of the entity. Okay. So let's just say we are in the manufacturing business and we manufacture these markers. Okay, so the markers, maybe we have $1 million in sales, $800,000 in expenses. Okay, well, that's the revenue producing activity of the company. Well, the principal. Okay, so let's look at then operating activities. So examples of operating activities. Okay, let's go to page 1031. Okay, so we have our inflows. So let's just think about it. We're making pens or markers like this. So inflows from operating activities would be customer cash sales. Okay, we took the cash, it came in. Collection on credit card sales. Nowadays, collection on credit card sales is that day. Okay, at the end of the business day, the money gets dumped into your account from Visa, MasterCard, American Express. Same thing with if they're using debit card, same thing, that money is going into your account right away that day. Cash dividends received, so maybe we invested money, like covered in chapter 15, right? We had a non-strategic investment or a strategic investment, we got dividends, okay? So that's an inflow. okay? Borrowers for interest earned, so maybe we borrowed money to another company, we got paid interest, that interest earned is an operating activity. Supplier refunds, lawsuit settlements, okay, again, that's all an operating activity, which is a cash inflow. Now, what would be outflows? Again, cash payments for salaries and wages, suppliers, okay, so goods and services we have to buy from our suppliers, government taxes and fines, interest to lenders, customer refunds, and maybe we have some charitable donations, okay? So again, that's an example of the cash outflows from operating activities, inflows and outflows. Again, page 1031. Okay, so again, today's class is just to get us used to what a operating activity is, okay? And so you're gonna see something, again, the reason I've assigned QS 16.1 and 16.2 is because what the question there is asking you to, there's gonna be all these different scenarios. You have to determine what type of activity that is. Is it operating, investing, or finance? Okay. So the next section of your cash flow statement is investing activities. Okay. So go ahead now to page 1032 and exhibit 16.2. So investing activities, these are the acquisition and disposal of plant, property, and equipment. Okay, maybe we got some loans, or other investments that are not classified as cash equivalents. So maybe we bought shares in another company that we're going to hold for 9 months. Again, it exceeds that time period of 3 months or less. This is going to be an investing activity. Okay, so again, some examples of investing activities that are cash inflows. The sale of capital assets. So maybe we sold a piece of equipment. Okay, maybe we sold some debt, meaning a bond, and maybe we issued a bond. Okay, so if someone bought our corporate bond, we're gonna have to pay out. Okay, so we got an inflow from the initial issuance of that bond, and then our outflows are gonna be the interest paid and the retirement of that bond when it comes due. Okay, now we might have sold equity investments. Okay, so that's a cash inflow. Again, that's our investments, like again, chapter 15, where we were either a strategic or non-strategic investee. Okay, settling principal on loans, or sorry, collecting principal on loans. So maybe we issued a loan, now we're getting that principal back. Again, and then selling loans or bonds. Okay, so cash outflows for investing activities, these would be to purchase capital assets. Again, we need to purchase equipment. Okay, maybe we purchased investments in another company, maybe we purchased bonds of another company. Again, anything you can relate to investing, okay? Or we provided a third-party loan, okay? Now, lastly, our last activity on the statement of cash flows is financing activities. Now, these are activities that affect the company's owners and creditors. So company owners being the shareholders, okay? So an example of financing activities would be, well, let's just look at cash inflows from financing activities, okay? So maybe we're gonna issue our own shares, okay? So we have a share issuance, we're gonna issue another $1 million in shares at $10 a piece, okay? Maybe we might issue bonds, okay? That's a cash inflow because someone's gonna buy our bonds, okay? And then eventually we're gonna pay back. Or we've issued current and non-current liabilities, not so much, but for the most part, we're going to be looking at cash inflows from issuing our own shares and issuing bonds, and sometimes notes. Okay, so cash outflows would be the cash to pay the dividends to the shareholder, because again, they've bought our shares. Maybe we have to repurchase some shares. Okay, we've covered that. I think I can't remember what chapter that was already. Maybe we need to pay some cash loans to lenders, okay? Or maybe the owners are withdrawing money, okay? So we've just got to determine what kind of financing activities these are and classify them accordingly. Now, we also have examples of non-cash investing and financing activities, okay? So again, the cash flow statement is only worried about actual cash coming in or out of the company, okay? So if we look at non-cash investing and financing activities, what would be an example? Well, retirement of debt by issuing shares, okay? So we sold debt, so we sold a bond to the public, and instead of paying them back cash, we pay them back shares. So that initially that's an inflow, but there's no outflow. Why? Because we retired that debt. Rather than paying back the bond of $1 million, we issued shares. So there's going to be a change in shares, in the number of shares issued, but there's no cash. Okay, so you really got to look at that when you're looking at your balance sheet. Maybe we converted preferred shares to common shares. There's no cash there. Okay. Purchase of a long-term, any purchases of assets, equipment, or anything like that by issuing a note payable, okay, that is not a investing activity. Why? Because there's no cash. It was strictly done by a note. Okay. Exchange of non-cash assets for other non-cash assets. Again, there's no recording of that. Declaration and issuance of share dividends. Again, share dividends are going to increase your dividend value, okay, and the number of the dollar value of those dividends that you have on the balance sheet. But again, there's no cash changing hands. If you look at even an income statement, okay, let's look at some income statements. One example on the income statement, okay, that's non-cash, okay. Well, depreciation, okay. Think of your depreciation expense. Debit depreciation. EXP, debit accumulated depreciation, I don't know, whatever asset is we're dealing with. So maybe it's $7,000. Well, that's a non-cash operating activity, okay. Why? Well, we don't write a check out to cash or to depreciate. We don't write a check out to depreciation expense for this. So this is non-cash, so we'd add that back. So that's just that's just one example of a non-cash transaction. And we're gonna get into that when we go into detail into each section, okay? So that wraps up today's lecture. So again, on the slide, let's go slides 1 to 15. And when you look ahead at slide 16, that's an example of what a cash flow statement looks like. As well as in the textbook, a really good statement is on page 1034. So again, I'd like you to do those questions, QS 16.1, 16.2, exercise 16.1. And this is what we're gonna do there is we're gonna classify each type of transaction. What should it be? Should it be a operating activity, either inflow or outflow? Okay. Should it be an investing activity, inflow or outflow? Or a finance activity, inflow or outflow, okay? So that's it for today. And on Tuesday, what we're gonna do is we're gonna start getting into making the first section of the statement of cash flows, and that'll be dealing with operating activities. All right, so good luck with that, and we'll see you tomorrow. If you have any questions, please let me know. Also, I'm still waiting on a few people to hand in their quizzes from Friday or Thursday or Friday, I can't remember. Yeah. Friday, sorry. So please get those into me today. And also, I've sent back everyone their marks for the midterm exam. For the most part, they were done pretty good. If you want to see it, please let me know, and I can figure out a way to get it back to you, or at least review it with you. But other than that, that's really the only message I have. Again, if you didn't get a mark that you wanted, okay, the best way to improve those marks is by handing in those quizzes, okay? Again, they're open book, they're not that hard, and it's a real good way to get your mark up. Okay, so I'll see everyone tomorrow, and like I say, do those 3 questions, and that should be sufficient for today. Talk to you later.